Leland Payne of Fairview, Texas writes, I'm really interested in what you, Taylor, and Tyler think about PXD. In the past, Motley Fool has high regard for the company, and last week they sold 12 million shares priced at $117. They announced the offering late Tuesday, January 5th, after closing at $125, and the stock opened up the next morning at $115. The funds are being used to fund production increases. Does this make sense for this company with WTI trading at $31 trending downward? What do you guys think? Taylor?
Well, that's Pioneer Natural Resources is the ticker we're talking about. No big deal. And
I just assumed everybody knew.
Now they do.
It's the energy show after all.
That's right. Yeah, we got some.
This stock hasn't fallen much in the last year and a half
compared to its peers.
Let me pull it up for you guys while you keep going.
Compared to the peers, no, especially lately. And you look at its multiples. It is trading more highly than its peers. So relative to its peers, maybe stock issuance wasn't a terrible idea.
Right. Get the money while the getting's good.
Yeah, maybe they want to go buy a cheaper, smaller peer or just some assets from one of them. But you look at a 7.6 times EV to EBITDA multiple versus a peer group of about 12 people that I looked at, average 4.6. So it is trading higher, much better debt profile. And it was, I guess, Wall Street looked at it as kind of an encouraging fact that this deal was fully subscribed. So,
well, it wasn't surprising that it opened up a little down because it was priced, a little bit below the market. Yeah. So that's fair. I mean,
But still, 117 that it was offered at is still valuing shares much higher than its large cap E&P peers.
Right.
And I think rightfully so. It's growing production thanks to some efficiencies that it's still getting from optimization, reduced cycle time from well to well, and longer frac lines. So it's doing things that are going to keep it competitive in this low price market. And it's got tremendous assets in the mid-con.
Cool.
Yeah, and one of the things that they do have slightly going for them is if you look at sort of the way that cash lays out, a lot of it seems to be they're getting to the point where all of these efficiencies and price gains, and now with, I guess you could say, the services companies giving them such a larger discount than what they were used to getting, they're starting to see a point where, for a while there, I think it was even David Einhorn was looking at them as kind of the, one of the staple examples of what's wrong in the shale patch. But they're starting to get to the point where there's capital discipline there, and those efficiencies are finally starting to catch up. Just actually pulling it up here, in the past 18 months, right about July of 2014 is when we started to see kind of the shakiness in the market. Pioneer's down 47% from there compared to then. Just to put that in a little bit of perspective, Continental Resources is down 75% over that time. And Chesapeake Energy, everybody's favorite's down 87%. So.
Speaking of Continental, they have zero hedges this year because Harold Hamm stripped all those away, whereas Pioneer Natural Resources has 80 or 85% of its 2016 production hedged.
Wow.
Yeah, so they made some decent moves. I mean, it's hedged at $60, which doesn't sound fantastic,
right now.
But when you're comparing it to $29, $30, it sounds amazing.
Looking like freaking geniuses over here.
Yeah. And that's what Harold Hamm just declared he thinks the price is going to end at in 2016 is $60 a barrel. So even if his prediction comes true, Pioneer isn't losing money on those hedges.
Yeah.
Yeah. Another little added bonus that they have is last year as they sold assets to Enterprise Products Partners they netted about $1 billion, but only got half of it. So this half of the year they're going to get an extra $500 million, which will help to kind of pay for that capital spending. They kept their capital spending for 2016 just about level what they did last year, while still predicting 10 to 15% production growth. So if you can get that kind of efficiency, you can't really fault them too much for being a little bit more aggressive while everybody else is reeling.
I mean, it's being a little greedy when everybody else is being fearful. I don't know.
It's not the worst thing in the world.
No. Okay, cool.